Oh. Okay, cool. So the Myrna, just to give you a rundown of what we've gone over before. We run out of Webull, so if you don't have Webull, you can get it if you even if you're in another country and you can't trade with Webull, it's still a great tool to have. But just to give a quick rundown, the first week we went over the indicators, which is going to be your EMAs, your super trend, VWAP, MACD, RSI, and stochastics. I'm not sure if I'm actually pronouncing that right, but stochastics. These are the indicators that I mainly use. And also there's ADX. I really don't go over this as much with people. Also Bollinger Bands is another, and MA is another. There's actually quite a few that I use, but these on my screen are the ones that I mostly use off the bat. Bollinger Bands is another one, kind of gives you, like I said, the range of volatility. Just think of it as like your natural body temperature, right? When it's too high, it has to come back to the center, right? So when it's too high, it comes back to homeostasis, which is this 20 MA that runs in the middle of this. So when it's below it, it'll shoot down to these lower bars and then come right back up. And so this is like a range. Like I said, when the temperature is too high, you have to come back down. When it's too low, you have to be, bounce back up. So it is a range of volatility. But another one I want to add is ADX. Let's see, this is on the sub chart. Was there a question? Or did that just pop in? Let's see. Oh, we got some more people in here. Okay, Sana, everybody, what's up? Okay, cool. So ADX is another one. So just to give you a quick rundown of ADX, and let me get some of these off of my screen so you can really kind of get a clear view of what's going on. ADX is not a direction by any means, okay? This is the strength of the current trend. So if you're looking at something and you're trying to figure out the strength of what's going on, this will tell you that this is, hey, this is getting weak. Whatever trend is going on is getting weak. Now for this in particular, we can't see much, but if you use it on a shorter term, let's say, let's see here. So right here, it was a downtrend, right? And it's saying that not that the direction is going down, but whatever trend that is currently going on, that is going down, right? The strength of it is going down. Now, the strength of whatever was coming next was beginning to pick up from here, which gave this strength right here. So like I said, this has nothing to do with direction, and it is everything to do with the strength of what's going on. So if you're a day trader and you use it on smaller scales, like a 5-minute or a 15-minute, like I said, it's going to tell you not the direction, but the strength of that direction. This is going to, the stochastic is going to tell you the actual direction. This blue line is the momentum, right? And this RSI is your overbought areas and your oversold areas. So I broke those down a little bit in week 1. I'm just kind of introducing ADX because it's, like I said, this is like an indicator that I don't normally, it's not a first, it's not a third. It's literally like last check. Let me just make sure that this trend, whatever trend going on is either weakening or strengthening in my favor, right? Because notice that the price actually went up, but the ADX had this like dip, right? So right here, this was losing strength, which probably caused this little hiccup right here. But right after that, it picked the strength back up, which then shot it up to this direction, right? So like I said, this has nothing to do with direction and all about the actual strength of the trend. So I don't use, like I said, I don't use ADX a lot, but I do like to look at it at times when like something's completely collapsing, right? Like for the instance of Bitcoin. Actually, Ethereum probably dropped harder, but let's turn on ADX. And so notice that this downtrend is increasing, right? So this is a great example because it's like, even though the asset is going down, ADX is going up, saying that this downtrend is picking up steam, right? Which is sending this further and further down. So the higher this gets, the stronger this trend is, okay? So everybody really understand that? I guess if I don't hear you say no,
That's
then
awesome. Yeah.
cool. So all right, so we're gonna move on from indicators, and because over the last few weeks we've talked about indicators, we've talked about options. Last week we kind of touched a little bit about the watch list that I create, right? And I recommend everybody go through and create your own little watch lists. Like I watch stocks that are in ARKK because I'll trade Tesla a lot, right? So I know that if a lot of these stocks are having a bad day, I can't expect for anything that I'm trading in particular to have a great day, right? Because like I said, there's a lot of things that follow behind each other. Let's see here. Let's go to this trade window. So if we're looking at, so today, perfect example, I traded Baba, right? And so if I'm trading Alibaba, I want to look at its competition, JD, right? Because look at the trend, it's the same, right? I mean, maybe I probably should have traded JD over Alibaba because it looks like it had a much stronger trend. But I was able to trade Baba with confidence today because I had its competition in my scope. All right. So I've got PDD here as well, which is another Chinese retailer, I think. But this one also moves the same, but it was under VWAP today. So I actually don't trade this in particular, never traded it. I just keep up with it, but it wasn't doing as good, but you can still see that it tried to have the same day, but it couldn't. But in particular, I was trading Baba and watching its competition. So this is just a perfect example of how whenever you're trading one asset, try to find something in the same industry or sector. So it'll give you support in your decision, right? So I was confident coming in and buying 6 call contracts right here because I saw that we were having the same trend over here. So I was like, okay, well, if Baba has support and is over VWAP right here, this white line is my VWAP. Like I said, if I'm day trading, I'm using VWAP. So once I saw that Alibaba once one was in a range for me, right? So like I said, whenever I trade something, I want it to be on a day in my favor, right? So if we look at how Baba looks on the day chart, you can see that it's past the 200 EMA, which is just like you've gone too far, right? And let's turn on Bollinger Bands so we can get a look. So on the Bollinger Bands, we're getting a squeeze, which means that at some point it has to break out of the squeeze, right? When we got a squeeze right here, it broke to the downside. Squeeze right here broke to the downside. Let me see if I can find one where it broke up. See right here, we had this little tight squeeze and then boom, we broke into this range, right? Tight squeeze and then we break out of that. So whenever you see your Bollinger Bands starting to squeeze, that means that we're looking for another move for this to expand open, right? You can only use indicators to make a determination whether you believe it's going to go down or up from here. Obviously, we have a range that we could definitely go down here just based on just history, right? So I want to keep this in mind. But to me, we've already passed the 200 EMA, which is like the ultimate, you've gone too far, as well as the price. We can see that we've been supported around this price, right? So I have support here, which gave me confidence in making this trade. Also, I looked at the analysis, which is another thing we discussed in weeks prior. And I noticed that during the days that we were in this price range, people were coming in and buying. Obviously, we're flat today, but I still wanted to come in and trade it because I knew that we were in a position where I felt comfortable, like, hey, I can buy a 210 strike price down here. Because if you look at the options, remember last week I was talking about the spreads on these. So in particular, Alibaba had a 210 strike price. So when Alibaba dropped below 210, that brought this right here, right? So I was able to come in and buy these contracts for a price like this. And then once it moved into the money, I was able to actually make this type of returns, right? So you're buying right at the money. And then once it moves in the money, that's when you're really being able to profit. Now, obviously, you can make percentage wise a lot more money in going out of the money, but you hold a lot more risk, right? You may be able to buy cheaper contracts, but look at the spread on these. This is $2.50, right? So each $2.50, you got to work just as hard to get to the next level, right? So the reason why I took this trade is because 210 was right in my face, right? So when you look at how this traded this morning, let's close this a little bit. We dropped down to 209, right? So if I can go ahead and have a contract that's at the money, and I know that Alibaba has the potential to stay over 210, I'm confident in buying that contract, right? Now, if you don't have as much money to trade with, let me take this ADX off so we can have some more room. So if you aren't working with as much money and you're trying to buy these types of contracts, the best time to buy them would be in positions like this, right? Like you don't want to go buy an at the money contract after the momentum has already worked out of your favor, right? Because those out of monies are going to start really fluctuating in value right here, and you're going to start losing money because you're not there yet, right? But I can't lose money that fast if I buy right in the money at 209, right? So if it drops down to 209 and then VWAP is telling me, right, that I've got support for you, right? So as it was falling this morning, VWAP was literally right here holding it up. So especially with where it was, right? It was at 209.82. That's when I knew I could be confident in buying the 210 strike price. So does that make sense to everybody? Why I would make that trade in terms of options? Just want to make sure if nobody says anything, then I assume you understand.
Yeah, it
Cool.
makes sense.
Okay, so and this is a perfect example. Like I said, when you come in and you all are trading, make sure you go find something else that trades with it, right? So with Baba and JD, these are both companies that are in the same industry doing the same thing in the same location, right? They're competition to each other. So if I like to trade Tesla, I can watch NEO as well, right? Let's see. So you can see that even these have the same trajectory, right? And look at ARKK. I'm sure it has the same trajectory. And what's even crazy is this is an ETF that holds quite a bit of stuff from Teladoc to Roku to Tesla, right? NEO is not in this ETF, but look at this. Look at this. Look at it. These are the same. All of these, right? Because there's significance to whatever, like number one, Tesla is in the S&P 500, so it kind of controls how the market behaves, right? So no, number two, ARKK is mostly held up of Tesla, so how Tesla performs affects how ARKK performs, and how ARKK performs affects how things like Teladoc or Roku might perform, right? You type in Roku, it had the same ending of a day. Maybe it didn't have the same start and same exact trajectory, but we can still see that by the day, it still had the same type of finish and effect at the same times, right? So, and Roku has nothing to do with Tesla. Neither did it have anything to do with NEO, right? But they all can still have the same trajectory. So it's important for you all to find out what trades with whatever you're trading, right? And I found these through creating watch lists, right? And these watch lists, actually, two, just a quick tool, just if you want to know the most traded ETFs, you can come over to the most active options. And where you see stocks, you can also change it to ETFs, right? So you can see which ETFs are going to be the most important ones that you need to watch, right? And the list goes on, but take your pick. You don't have to follow everything. I can tell you what I follow. Um, Let's go to stocks, watch list, and indexes. So the indexes that I follow are going to be what I'm watching, right? Like let's take, for instance, Jets ETF. So Jets ETF is the airlines ETF. So if I'm looking at this, let's look at the analysis and asset allocations. Well, top 10 holdings. You're going to see it's the airlines in here, right? So if I would like to trade Southwest, United, American, I know a lot of people trade American Airlines options. If you do that, you need to be watching Jets, right? Because if Jets has now hit a low, right? Well, it hasn't exactly hit a low, but it looks like it came down to its 100 EMA, right? And let's take off some of these so you can see what I'm saying here with the EMAs, because these EMAs are so important. I had somebody message me the other day and was like, bro, the EMAs are so crucial. And I'm like, man, we went over that week 1, right? So I want to make sure that everybody knows that EMAs are available and they are important. A few that I have is the 50, 100, and 200. These are just good for areas of support and resistance on a long-term basis for a trend, okay? So if I'm going to be looking at something for 50-day, 100-day, 200-day, I want to look at a day chart, okay? And for anybody that is still not using a day chart, it is so crucial for you all to do this. I know where you're coming from. I was you. I liked a line chart, okay, because it looked simple. And I did not like using a day chart because I was like, that doesn't tell me anything. You know, I just didn't feel like it was getting me the information I needed. I wanted to make these types of moves, right? But you need to definitely be looking at large scale, just big picture, right? And using candles. So in terms of the EMA, let's take a look at this. Notice how it's respecting this as a support. Let me take off super trend as well so you can clearly see. So notice that it's respecting the 50 as just really the 50 is more like, is my trend continuing? Okay, so if you were looking for a spot of continuation, you could add more to your position here, right? But if it does not hold this 50, know that it's going to the next one. Okay, so I always have this 100. A lot of people don't use the 100, but I like to have it there because look, there's some things, there's some assets that interact with that line, right? You even look at what Ethereum did. Ethereum actually touched its 200 today, right? So that's why I was like, okay, I'll go buy it, but I mean, it's still dropping. So I caught a little window of glimmer of hope in this, and it did a little dead cat bounce for a while. I made some money, and then I sold it again because I was like, man, this looks like, number one, the thing that scares me the most about crypto right now is that most of them follow Bitcoin. If Bitcoin still has room to fall, I'm not happy, right? I'm not confident. I'm not jumping into this, right? Because Bitcoin still has room right here. MACD just did like a death cross right here. If you're not familiar with the MACD, we talked about this in week 1 or 2 as well. There is a MACD line and a signal line, right? When this is starting to cross back over this line right here, your blue line is the signal and this is the MACD. When that MACD crosses that signal line, that is the death cross, okay? So you can see it did it right here, and then look what happened to the price, boom. Because when traders see this type of stuff, they're like, oh, I'm out, right? Like, I already see this happening. I'm not about to stick around and lose my money, right? Like, I mean, you can see what happens when it does that. Look at these price drops when that happens, folks. So pay attention to these things because they're important. MACD is like my best friend. I really love RSI. And next to that is the stochastics, because that's going to tell me now or later, right? Because anytime this thing has room to fall, just know it will, because that's telling you the direction, right? So we maxed out here and we came back down here, right? So as of this, I'd say 30,000 is a bit of this, I guess, where it's heading in terms of where I feel comfortable anyway, or 31, right? So I did not hold any of my crypto positions because I saw that Bitcoin still had room. So it's important that you all watch all of them together. This is another example of how if one has some room to do some wrong, it's like it's basically that whole statement, like if one bad apple can spoil the whole bunch, right? So even though Ethereum might be at a great cost, right? Even Litecoin and everything may be beyond where it should be going. The fact that Bitcoin is sort of the mean for all of these, they have no choice but to follow suit. So if this has room to fall, so will the rest of them, right? So just keep that in mind. But long term, I'm comfortable in this area, obviously. Right, we can see what happened last time we were here. And now we're just waiting on this to really recover. But if it's got room to go down, I don't really like trying to beat that, right? The only reason why I went after Ethereum today is, like I said, it fell to its 200 EMA, and I played it off of that line. I probably caught this little burst, or it was more at the end of the day. So maybe this little burst right here, and then I had to let go as soon as we got to this point because yeah, it just reversed. So just another example of how you need to pay attention to a collective of things, because even with the crypto, I have a watch list for that as well. So if I know that these cryptos are going to fall, right, I know that tomorrow these stocks are going to open low. I mean, even if you look at the aftermarket for these things, right, they already fell. Even with MicroStrategy, it completely collapsed at the open, right? Why? Because Bitcoin fell over the weekend. So the reason why these stocks are affected is because they are heavily invested in crypto, right? So if Bitcoin falls, then the value of this stock has to fall, right? So therefore, if you ever want to also understand what's going on with your crypto, watch these stocks because they do come with VWAP, right? Now on crypto in Webull, you cannot see VWAP. So I don't know whether the volume is actually working against me or with me in this case right now, right? But as long as the market is open and I can see crypto stocks, I can see that the market is working against me, right? I can see here that this is not in my favor, all right? So it's important for you all to keep up with these stocks. I don't trade all of these. I just know that there's some that people have profited from. This right here is a Bitcoin trust, right? So it's not something that's heavily traded because you can only buy it on certain brokerages. So I wouldn't watch this in particular, but MicroStrategy, your Mara, your Riot, Coinbase, all of these things are affected by what Bitcoin is doing, or cryptos in general, right? So just another example of how you all need to watch a collective, almost a watch list of things. Another one will go back to the indexes. So let's see what's actually been down. So for what's down, we've got our short ETFs that are down, and our VIX has gone down, which is good news because the VIX was pushing up. Now, when the VIX pushes up towards 20, that means that the volatility in the market is increasing, right? So last week I talked about this. So if we looked at VIX and we looked at SQQ, and we looked at QQQ. Let's see what we got over here. We'll put this on an hour. We'll put this on an hour. We'll put this on an hour. So the VIX, when the VIX goes up, you can expect a lot of volatility in the market, right? So what we're seeing here is that if the SQQ is going up, then that means this is going down. So for the moment that when we open the market and the volatility was high, this was up, right? Because the SQQ is the short ETF, which means you're betting against this, right? So these are inverses of each other. If this is being supported, this cannot be supported, okay? So also with this, if this is going up, this got to go down, because that means that this is confidence in the market. That means that, okay, we want to invest in tech. This means that I'm scared. or if this increases more so, that means that fear, I would say the VIX is the fear meter, right? The more this increases, the more fear and volatility in the market, which then forces this to shoot up, right? So this is just yet another example of how you all need to watch several things together, because whether it's the inverse or the thing that's working in your favor, it's important for you to watch, because I know that if this VWAP is working against the SQQQ, I'm going to buy calls in the market. Okay. And for the QQQ, let's say Apple today, I traded Apple today at the open. I don't always catch Apple at the open, but I feel like Apple's just like a really easy victim for these types of things, just drops at the open. So I caught this small little window and made $100 on this little drop right here. Because see, in this moment, it hit a low of 129, and I had a 130 call or 130 put, I believe. So as soon as the market opened, I didn't even care what happened. I just bought the put, right? So as soon as the market opened, I said, all right, Apple's over 130. I'm buying the put right now, right? So we opened up at 130.45. I immediately bought the put. It dropped down to 129.21. So within a matter of minutes, I made this trade, right? So the market opened up, boom, this is me buying right here. And then it just dropped. And I made this $100 in this little window right here. And that was all of 10 minutes, 5, 10, yep, 10 minutes, right? Because I knew at some point this was going to get some support, because I was watching this as well. And I was like, man, this is not looking good for me over here, right? So if this is going down, that means this can pick up strength. Right, and then look at even the same trend on these. So if I put this on 1 hour, let's see, that's not the same day. You can see here that this was the inverse again, right? So if you want to trade tech stocks or anything in the QQQ, let's take a look at what's in the QQQ. Because I know many of you probably trade a lot of what's in here. And so it's important for you all to watch this. So top 10 holdings: Apple, Microsoft, Amazon, Tesla, Facebook, Google, NVIDIA, PayPal. I mean, list goes on. These are just the top 10. So if you trade any of these, you need to be watching all 3 of these, right? So whatever you're deciding to trade, and you need to watch this and that, right? Because if you're going to trade whatever's in the QQQ, this is the inverse of you. This is exactly what's working against you, right? So if you come in and you're like, oh, I'm gonna buy a put against Apple and I'm gonna hold it because I know Apple's too high and it's gonna go down. Well, it's like, well, no, right here, you're being rejected with this VWAP. This VWAP is saying your price is under me, right? So you're being pushed down by the weight of this volume. And in this case, if you see that I'm being supported, yeah, it gave me, honestly, I'm not sure if Alibaba is actually in the QQQ, but this right here actually gave me confidence to go trade Alibaba as well. So as soon as I switched over to Alibaba, I was like, okay, I know that Alibaba's competition is JD, and I know that PDD is trading with that as well, right? So anytime I'm trading, I want to come in and look at all of what's in the industry, as well as what could potentially help me in making my decision. Because like I said, as I was trading Alibaba, I noticed that even JD had a stronger trend, right? So what did I do? Instead of going to buy the option, I don't like to buy too many contracts in different companies. I think it's too much volatility in options to have like a whole bunch of fires to put out, right? So if I'm gonna just focus on Baba, that's cool. I'm gonna trade options here, but I went and bought the stock here as well because I noticed that I had support here. And if I'm gonna buy the options of calls here, I'll buy the stock here, right? So I went and bought shares of JD right here, and I noticed that the trend was strong. I was gaining on my shares. So I felt even more confident in my call, let go of my call, held my shares, and, took those profits, right? Because my call got the best value right here, right? So if you don't take it here, I think I actually sold somewhere in here, and this was like an extra $30. But then after that, right, you're dropping probably about, 15, 20, $30, maybe more per contract, lost in profit, right? So always pay attention, and if you're going to trade, find out what trades together. So everybody understands that. Anybody want to look at anything in particular, a stock? So I can kind of show you how to find these things. If not, we'll keep it moving. All right.
Hey, I think you have 2 questions in the chat section, man. Yeah, man.
Oh, nice. Let's see. How do I get to the chat? Okay, chat. Here we go. Okay, how can we put stocks side by side like that? Can you go over spreads? I never looked at that. Only the bid and ask. Okay. Yeah. I got you. Okay, so let's actually do this together because I think this is important, especially if you all are using Webull. So Webull does not come set up like this. All right, I did this myself. I just came in and built these boards. So you know how when you see somebody their trading setup and it's like a bunch of windows of a bunch of stuff, I was like, all right, why do they need that? And what exactly do I need to be looking at, right? Well, I realized that I need to be looking at the market and the market together, right? So I have this particular watch list set up just based on what trades together. So I have the S&P, the Tesla, Microsoft, Apple. And then for my crypto type trades, I've got Mara, Riot, and Bitcoin that I'm watching together, right? So all of these are patched together. And these are just here just for like additional markets. Anytime I'm just watching something in addition and I want to just keep up with it, I'll just drop them in here so that I can see the market as a whole. Now, all of these are set at different time intervals, but for the most part, I would have these at a day so that I can see which one is actually coming into a position that I like to trade, right? So I'm not trying to trade everything. I just want to catch something that has fallen into a position that I'm comfortable with. So with these windows, you go to new board. All right, so when you click on new board, they have some that are already set up for you, but you can also do blank, right? So if you do multi-trades, that's going to be the easiest way for you to get my 3 trades set up. Click the 3 trades is going to be the one that's vertical. This will probably be the easiest way for you to do this without having to do this yourself. Now, you can keep this stuff because this is like the market is closed, so this isn't going to be moving right now. But during the day, this would be moving. You can make trades right here. Well, I'm not actively making trades on my desktop. I use this for data. And I mean, I can make a trade with my RRA in here. So you can just right click, new order. You can trade just like that. You don't need this particular box because this box will pop up when I do new order. So also when you're coming in and doing a new order, take a look at the stop loss and take profits, right? So this makes it almost like seamless. When I first was trading stocks and options, I would come in and just do this, right? I would just come in and say, okay, I want to buy Apple at 118. And so let's say, I'll put this in here for you. So whenever Apple hits 120, I want to buy it. And I want a stop loss at 1950, right? And I want to buy, let's say 10 shares of Apple. So I can only lose, wait, 10 shares. Okay, yeah. Okay, so stop price is 119.50. So I can only lose $5 on this trade, but I want to sell it when Apple gets to 132. So I have the opportunity to profit 120 if this is the trade you want to make, right? So I always used to do this, and it was super phenomenal for me because it was like I was like making automatic profits, because with these limit orders, you just come in, type the price you want, and when it comes to you, it'll trigger it and you're good to go, right? You don't have to chase a stock, you don't have to watch it all day. But go ahead, was there a question? All right, so I'm gonna finish doing this. So For this, you can exit out of whatever you don't want to keep. If you do want to keep these windows, you can do that. So exit out of these. And then after that, just grab it, make it bigger, right? Because you can customize and edit these windows however you want, right? So this is my watch list. And now these numbers right here play a huge factor in how you group these together, okay? So let's say you want to also trade options in the same window. Oops, I created a new board. Okay, so you want to trade options in the same board. Go to widgets, settings, click on stocks. So you can add account details. This will just be your account like this right here. You can add a watch list like this. Positions, that'll be the positions that I'm actually holding in any of these. Orders, current orders that you have, whether they're to fill, cancel, sell, they'll be right here. It's all right here. This position and orders is right here. But I don't usually keep these because anything I'm buying with my RA, I'm confident I'm at the bottom and I'm holding. So you can go to stock, click options. This is just an example. There's a lot of stuff you can pick, but I'm just going to do the options for right now. Move this down here. You can make more room, right? So this screen can be as big or as wide as you want, okay? So if I want this to follow with my watch list, right? So if I click one of these, well, Bitcoin doesn't have options on Webull, but if I click Wix, it's going to change this chart right here because it's the group together, right? But how do I get the options to follow? Click this little dash, right? And you want it to group one because your watch list is group one, okay? So now anytime I click on this watch list, it'll change my first window, which is grouped together, as well as my options window. Now, let's say you want to see the stock, how I see it in my trade window, but you want it bigger, right? So you want to see it over, let's say you're trading, let's say Tesla, right? We'll type in Tesla right here. And you want to see it over several different time intervals, well, change these to your first one as well. Change these to group one. And then you can say, all right, give me 1 day right here. Give me 1 hour right here. And then I'm trading my 15 minutes right here, right? So that way you can see big picture what's going on, right? And then, and you can make some more room. So you can get rid of some of this Chaz over here. Wow, this is a big window. Just kind of stretch these out a little bit. Also, you need to leave some empty spaces so you can scroll, because anytime it touches one of these screens, it'll just scroll in the graph. So try to leave some empty spaces somewhere so you can continue to scroll around. Okay, so I don't have my windows set up like this, but just showing you how you can group them. So if you want to look at several different stocks or maybe the same stock, you're trading it on this 15-minute interval, then you can add your indicators right here as well. So you can, and what's cool here is you can see, like, you can say, all right, I want my EMAs over here, right? Because I know this is big picture. I want to be meeting it here. All right. So if I'm not there yet, I'm ready to buy a put. And it's like, okay, on my 1 hour, I want to look at my Bollinger and my VWAP, right? Or maybe even my super trend, you know, whatever you want to do. I don't really need Bollinger. I know where the trend is. So for my VWAP, you can have that here. You can have your VWAP over here as well, because this is short term. VWAP does not show up on a day, so you don't even need it over here. So you can just set them up in different windows, right? So you can come in and trade these. Now that it looks a little messy. Let me shrink some of these a little bit. So you can grab this little bar on the side and kind of condense them a little bit so you can have a better view. So they're not so spread out. And then zoom in. So yeah, you can come in and set up these different windows like this. So anytime I click here, it's going to update that for me live, as well as the options. So like this would be like a big window that I could use to trade in for options. So you can make this even bigger and then move it down some so you can scroll even further, right? And then you can increase the amount of options that you see, and you got them all right here, right? So as I'm trading, I'm like, all right, what's going on with the market? Okay, I got my lowest right here. You know, none of these trade options, this is crypto. So, all right, here we go. So I'm like, hey, all right, this got hit today. So I want to come in and I want to trade this. So all of my windows are already set up over these time intervals. So I got big picture with my day. I've got my 1 hour, and then my 15 minutes, you know. So group them using this. Now, if you wanted like this trade window, I've got the ticker right here as well so that I can see the orders coming in. Okay, so when the day is going on, I can see this coming in. And so when I'm about to buy my option, I got it on 1 minute, because literally I'm trying to get the best position possible, right? And so I do want to see every level I can. I'm looking at big picture. I'm looking at short term. I'm also looking at what's happening right now, right? So 15 minutes, 5 minutes, whatever it is I choose. I can take these EMAs because they're not as important on this level, but you're coming in and you're using these indicators. If you need these additional sub chart indicators, you can just leave them in one chart. So I can switch it over to an hour, a day, whatever. Whenever I need to see these, I can use this chart, right? So I can say, all right, I'm not ready to enter this position. This is not a position I would enter, right? Especially not on the upside. And so, because really you got room to fall and you're maxed out on the stochastics. So yeah, that's a no for me right here, which is why I bought a put. And I actually spent a lot of money on the put today. I would not, I usually don't recommend doing that, but I had a pretty good week. So I'm like, I'm just trying my skills here and just building more confidence. I realize that it takes money to make money when it comes to options. So I'm playing more in the money, and I'm willing to pay the price too, and I'll buy a lot of contracts. And so that's proven successful to me only after I've had losses in the past for learning about timing. That's why I have this 1 minute here so that I can be by the second in the best position with this option, because these things will change prices so quick. It's like you could buy into a contract and immediately be 50 down, right? Because look at the spread on these. Go ahead.
I'm sorry. When you're, I don't know how to do the raise the hand thing.
Oh, it's all good. You can just.
I just wanted to add this to you for you, because you know I've been really studying options, and it's just made a world of difference. You're right about the in the money or at the money, especially if you're like scalping or getting in and out, which I know you do. And the other thing that really like was amazing for me, and I made like an extra $100.
Yeah.
Was so the way you see how you have yours, hon, you have go back up. So you see how you have implied volatility, open interest volume. Well, I added, I took out the implied volatility because I realized I didn't need it. And I added delta.
Yep. I have
and
delta.
then I only bought, and then when you do the delta, then you look for on the call side, 0.30, anything 0.30. And then when it goes in the money, you will get, I got 100, it went in the money, 100. One of mine went in the money. It was at 30 and the delta went to 100. That means you get $100 extra on every
dollar
yes.
Moves.
And you know what, hun? And the thing is that when you do at the money or in the money, like you're doing, most of the deltas are either like at 29, 30, or the puts are at 0.30. So you'll make double your money.
Yep. So what
I just
Kim
wanted,
is basically,
I was so happy. So I was breakdancing this
hey,
morning.
hold up. Kim is studying though, because that's something that only like somebody that's really been reading will understand. Because I remember not only did my dad tell me that, like when I first started trading, he was like, you want to look for something that has, you know, the delta over 30. So basically what the delta is, for people that don't know, this is the delta, okay? This delta, okay, these premiums right here are multiplied by 100, okay? So this right here is $955 to buy this contract. That is the bid, so that is the lowest price at this time. and this is the highest price, right? This is the price at which I guess sellers are asking. This is the price people are willing to bid and pay. Okay, so when you talk about the bid and the ask, that's the best way I can kind of break it down. I'm asking you to pay this, but you only willing to give me this. Okay, so that's the spread in between this. So you got to be careful with these two. If the spread is too big, you need to be careful, because look at where this price is. Okay, the last price for this contract was at 1083, but there's a bid for 1050. Okay, so that is a $30 difference. So if you buy at this price and it drops to this, you're already $30 down. Okay, it's not that bad. It's like, what is that, like 3%? But you're still in a, I would rather put me in for 1050 or 1060, because I know that this has some volatility to stretch, right? If this, now I'm not saying go buy this contract. I'm just saying, like, that's what you all need to be looking at when you're coming in. You need to be paying attention to the bid and the ask, because this spread is crucial. If this is a very large spread, it can be very detrimental to you as well. So if there was like $1 spread in between this, that's scary. Okay, because that means that at any point, this completely, if just for one candlestick, it went in the wrong direction of your call, you can drop down to this bid, right? So some contracts too, I will literally, I don't know if y'all seen this, but sometimes I will post an entry and I'll already be up $20 or $30 because I bought the bid, right? Because most like really aggressive day traders, they live by the phrase, buy the ask, sell the bid. Okay, but if I buy right here and then it ends up coming back to break even, and then I end up selling it at this, I lost 35 bucks right there, right? Or 45 bucks, right? So I'm not in this to lose money. So I always try to get as close as I can for the bid. It is a bit reaching, but what I'll do is I'm gonna tell y'all my strategy. So when I come in, I'll put like 2 or 3 contracts at the bid, and then I'll buy one for the market. Okay. So what happens is, if the joker drops to the bid, I now have 4 contracts, or 3 or 6, however many I'm feeling aggressive with it, right? But I'm not gonna chase this thing, because if it were to go up to 1095, I know that it could drop to this or that before it really got its chance to take off and get me profits. So what I've noticed with a lot of times with entry on options, you're most likely going to be losing before you're winning, because you can't catch 100% of the trend. So there are a lot of times where I'll come in and I'll say, all right, if this is the bid, I want 2 contracts for this price, but I'll go ahead and buy one right now for this price. But if you drop down here, no, I got 3 of you now. So I'm going to have just as much leverage. My average price has now moved down because I bought more at this position. And I got more leverage. Now with that more leverage, if it keeps going down, then I'm losing faster. My losing has become multiplied. Just the other day, I had a trade for, I can't remember what it was, but I was down 200. But I decided to go ahead and I was down 200 on like 2 or 3 contracts. So I was like, cool, I'll make it 6 contracts. And I was out of the hole, y'all, within like 30 seconds. And then I can immediately sell a lot of that leverage, right? So once I came out of the hole and now I'm up $100 after being down 200, I can go ahead and take some profits on some of those contracts. So if I've got 6 contracts, I can go ahead and sell 3 of them so that I don't fall back with as much leverage, because I did start at the wrong place, right? So keep that in mind when you're averaging down. You want to make sure that you're letting go of that leverage when you move back up, because if it reverses on you and goes right back to where you started, you've got more leverage just working against you, right? So anytime that I do average down on a position, I will always try to go ahead and take profits as it's going up. But back to Delta. Delta is telling me how much money I'm going to make per point this moves. By definition, this is the increase in the premium per point in the underlying asset. Okay, so simply put, for every dollar that Tesla moves in a call position, I will get $50 on my contract. That's how I make so much money in like when the market opens, because of Delta, right? Like I'm not trying to, this right here isn't gonna, now don't get me wrong, if your stock is gonna move this quick, by all means, go out of the money, right? But there is not a iceberg's chance in Hades that within the time frame that I like to trade, that Tesla is going to hit these prices, right? So, and look at the spread. Like I said, it's a $2.50 spread. So that means that it's already working against me, right? So I'm not trying to, this risk to reward is not worth it to me. I'm not about to go spend $750 to make $40 for every dollar that Tesla moves, right? But I will spend $1,000 to get $50 for every time this joker moves, because I know that if I buy it at the right time, Tesla can move $20 or $30 in a day, right? So that means that for every dollar that joker moves, I'm going to make the delta. So this is 50. Like I said, you're going to multiply these by 100. This is $50 right here. So if you go out of the money, right, you go pay $640 for this contract. If Tesla moves up a buck, well, you only get $37 on your 600. Okay. So that's why I say be very careful when you're going out of the money. However, these are great plays if you have like crazy momentum, right? Like if Tesla fell to five, let's say that Tesla being at 620 was the equivalent of Tesla being at 550. So let me show you on the chart what that means. If Tesla is at 550, it didn't stay down here. You see what I'm saying? Okay. So I don't mind going and buying a 600 contract on Tesla, because I know that within that week, I will be back and in the money. Okay. So if I'm at 620 to start the day, what did Tesla open the day at 624? I got no business going to buy any of these contracts that are out of the money, right? Because I've reached my max. I've reached the end of the road. So the only time I would recommend buying out of the money, if you so believe that you will be here in no time soon, because time is working against you. There's a thing called time decay, which is theta. And I'll show you theta. I can't tell you that I understand the calculations, but one day I bought a contract when, like, I think Tesla had actually fallen down to 190, and the theta had actually was like it was like 0.90, right? So that was meaning 90 on whatever contract I had, because it was a little bit out of the money. That means that for every day this does not work out, you will lose that money, right? Now, I don't know if it's to the T or how it's calculated. Like I said, I don't understand it to the T, but on that particular day, that contract had dropped 90 cents in premium, and I got it for $100 cheaper. And the theta at that time was 0.90. So I'm assuming that since the day happened and Tesla was not at that price, it lost 90 off the premium. Like through the day, it was going to chew that 90 away. If you're not going to move in my favor, I'm going to eat this price away. So you can see that, you know, obviously these people lost money because it reversed. Tesla didn't have a great day today. So these people lost money, right? And really, these people didn't gain any money because it went sideways really for the day. This is a pretty even day that it had, right? It just kind of opened here, fell here, but really just had this day where it just went sideways, right? So everybody technically lost money, or there were times in the day where you could have made money. But for the most part, everybody really kind of came out at a loss because it was breaking even by the end of the day, which really messes up with the value, because there's a value that comes from the demand that is in these options as well. So when you're asking yourself, what is the risk to reward ratio? Ask yourself, do you want to pay $750 to make 40 bucks for every dollar this thing moves? And for Tesla to go to 630, how many dollars do you think you're going to get close to this, right? So that's the question you need to be asking when you're observing Delta, is that when I can't, let's look at Baba, because I actually traded that today. So when you look at Baba, let's look at the options. Oh, come back to this window and put it in here. So when you look at Baba, this $10 strike, or this 210 strike, started here probably at a premium like this, right? At a premium of, I mean, a delta, excuse me, of a delta of maybe like 40 or maybe 50 or something. And as I held those contracts, I increased my delta, right? So down here, you're not even making that much money, but you're also not having to spend that much. But the chances of Alibaba hitting these prices this week is not rare, but your chances, basically the data is not in your favor and it's showing it in these prices. So if some chance of a miracle that this week Baba was able to hit 220, then your contract could go from $35 to 200, right? So there is reward in making these types of risks, but there's also everything to lose, right? I mean, these people lost 54% today. I mean, you got half of that to lose, because what's worse is that people will come in and buy more of these contracts, which doesn't take away from the fact that you're probably still going to spend $168, right? So whether you're going to buy one contract for $168 and have a little better of a chance of being in the money, or you're going to come down here and buy 5 of these contracts and then lose half your money trying to do that, right? So yeah, I always try to stay up in this area. I don't really buy in the money though. Like I don't really do that because there's really no advantage to really going in the money unless you're confident that it's going to take off and you just want to be in the money for some reason. I actually don't know anybody that just comes and buys these contracts, because they actually start losing value and don't gain any real value after a while, because it's like, okay, we already left that area. Like nobody's even considering or thinking about this. So nobody's trading this, which means that you would probably have a hard time trying to sell that contract. So imagine having a $1,700 contract or $1,900 contract and nobody wants to buy it. Okay, that's what happens when you hold these for too long. Or maybe they're holding for longer and there's no volume, but still nobody was buying those contracts. So if you were in here and you're profiting and you're trying to sell this and nobody was even here to purchase it from you, and that happens. I've had contracts where like I tried to sell it and because nobody was trading, that's why I always say pay attention to volume too, because this happened to me one time. I think I was trading Netflix. I bought a put on Netflix and Netflix was going down, but I was losing money on my put because nobody bought that strike price, right? So if nobody's trading my strike price, it doesn't have any value. It holds no value at all, because I could have the finest diamond and gemstone and precious metal in the world, but if you don't want to buy it, what does that mean to you, right? Like, and I could make it as cheap as possible. Like, yo, buy this pink diamond for $2. And you're like, I don't want it. I don't even want it, right? And that's the situation you can be stuck in. If nobody wants it, you ain't making no money and you sure ain't gonna get your money. So be careful about that, because it's happened to me. And you know, the whole goal of this is me trying to, you know, at least teach you all some of the mistakes that I've made so you don't make the same ones. So with options, it's not like stocks. You don't need to go chasing these things. Like I said, I keep this on 1 minute so that I can know to the T, go or no, right? And on this 1 minute, I'm like, okay, go, 210, 6 contracts, right? And that 210 moved into money, right? And I wish I could show you all this chart, but I can't do it on the desktop. But if you go on your phone, you can see that these contracts were like at $1 premium. And I actually sold these contracts above $3. They ran up to $3.30 and I sold them at like $3.10, $3.20 and bought them when they were right here, right? So that's why I always try to go right at the money and then I'm in the money. But you have to know the price of your stock. You have to know the price action. I know that. And we talked about this last week when I broke down Alibaba. I told y'all if Alibaba can't hold this 210, then we were going to go below it and test that, right? So when, I think last week, let's see, what's today? 21st. So last week we were right here and I told y'all, I said, look, I'm comfortable here, but if Alibaba can't hold 210, we falling. And what did it do? It failed to where, all right, I'm comfortable buying options right here, okay? Now I bought the shares at 211 something and I've been losing, but it helped me watch this. So I was like, dang, I'm down 3% on my Alibaba. I'm about to go buy options. Because if I was confident enough to buy the stock at 211, well, I'm definitely buying options if we fail from there, because I know that this worst case scenario, 204, okay? But for the most part, we've held this 208, 209 type area. So y'all, when the market opened up and Alibaba did this little dip to 209, and I saw that I had VWAP, and then like I said, I came over here and put it on the trade. Actually, it's this window right here. And like I said, I saw that its competition had support too. Now, this was making me a little scared because PDD wasn't coming up, but JD was looking really strong, and this gave me all the confidence that I needed, because I know Alibaba, I don't trade this, but I know this is going to run with this. So I'm not messing with this. I'm not touching something I don't know. I don't ever go trading something that I've never traded before and I don't understand. I've been watching Alibaba since last May. And I've seen this thing at $330 and I bought a put on it. And that was like the first time I like made like a lot of money. And I didn't even know what I was doing. I just knew that, oh my God, I just learned options. And I remember coming in, and one day I woke up and Alibaba was $330. Y'all, when I understood just the basics of options, and I was really stupid and novice at this time, but I still was like, okay, Alibaba is at 330. There was a time where it went to 330 now. Well, maybe it didn't go that high, but it was up here, and I was like, yeah, you're too high. Bought a call, and I didn't know what I was doing, so I held it anyway. And lo and behold, man, this thing started dropping. And I bought time on this as well, because like I said, I still didn't know what I was doing at this time, but it did what I needed to do. I knew it was too high. I bought a put and we made some money, right? So you have to know the asset that you're trading in order to trade options. You cannot just be like, I think this is going to go up, so let me go buy the option, because what's going to happen is, with options, you stand to lose everything that you've put in. These percentages are no joke, okay? Like when it says that these people went negative 50% on some of these trades, that is no joke. I've been there before. I've been in Tilray before, and I've had contracts go to worthless, right? And then the next day, though, he had a great day and popped up and gave me $400 in profits, right? And I didn't sell the contracts because they were worthless. But it was a situation where you're in something like this and it goes worthless. Like you started here and then you held it and it lost all this money. And then by some miracle, Alibaba runs up to 235 and now you got money, right? So that's the only way these contracts are going to work, is if you got that much momentum to move here. That's why they're not that expensive, right? Because one, Alibaba doesn't have that much volatility that it would make a $20 or $30 move in a day. So these are almost worthless because the potential and probability of them happening is almost zero to none in value, right? As well as losses. Like anybody that thought 225 was a good buy, well, they just lost 60% of whatever they had bought, right? And they probably bought quite a few contracts. I mean, look, there was open interest, and now it had a volume of 1,300. So maybe these people were selling on the way down because they got a little scared. But anybody that was holding these contracts, they taking these losses. These are real. So don't play with options if you don't know what you're doing, because you could lose these. These percentages are real, right? The dollar may not seem like much. This may be $10, $6. But when you invested a lot because it was cheap, you bought it at 20 or 30 or 55 because it was cheap, and then that joker drops to $9 per contract, well, you're down a lot, if not all of it. So be careful with that. That's why I watch it on a very small scale as well. Like I want to see what's going on right now so I can buy this at the perfect time. Like the worst loss I want to have on a contract these days is like $5 or $10. If I'm going above that, my timing was bad. Like that one that I was down 200. Yeah, that was a matter of jumped in way too early and just had to be patient. And I didn't set a stop loss as well, because I would never take a $200 loss. So I would have been out at negative 20, but I was feeling really aggressive and I kept buying as it fell, and I was negative 200, but I was so confident in where we were on the day chart, right? This is big picture. So if I know that in big picture, I'm okay with throwing more leverage on a short term, right? Anybody else would have freaked out when Alibaba hit 209 and would be like, I'm down. But I was like, no, I want more, right? I want more because I know where we are on big picture. And then VWAP, like I said, was in my favor. So look out for these things. Anybody have any questions? Anybody? Is everybody understanding what's going on? Let me check out this chat to see if we have anything else.
So, I was going to say something about the out of the money contracts, and I learned this from somebody else in regards to buying those contracts, that before you buy the out of the money contract, you should always look at the net change to make sure like the values of the contract have not like gone up. So if you're going to buy any OTM ones, make sure like the net change is like negative. Or at least plus $1. It's only gone up $1, but if it's gone up like $7-10, then there's really no point of buying it. So whenever I buy the out of the money ones, even whenever I buy any option contracts, I always look at the net change to make sure I can at least make money, especially when I'm doing the out of the money contract. So that's something that I use for out of the money contracts, and it always works. I always get like 100% gains. But once again, you're buying a contract for $5, you're getting 100% gain. It sounds like a lot, but it's not really a lot. But at least you're getting something off it. So that's what I do out of the money contracts.
Yeah. So basically, what he's saying is that in a day, right? Let's say I come in the day, and what position is Alibaba in? So it actually had a decently good day. I think overall it actually went down for the day though. Yeah. So it started at 212, but since the time that I entered the position, it had a good day from there. So technically, these numbers are based on, these were way worse, right? So at some point, these people were actually down 70% or 80% or even 90%. So what he's saying is you have a better opportunity to get down in these positions when they're so high, right? So when the day started, this might have actually been down actually really bad, because if we started at 212 and then we dropped to 209, these contracts probably went to like 80 or 90% negative at that time. And you can go open these up on your phone, open up Webull, because Robinhood won't let you see this, but click on these. You can go look at the chart and see how it moved, because what's going to happen is these call contracts are going to have the same trajectory as this. The calls lost value. They opened. We had a low on the contract for the day, and then we made it out of our negative 90 to negative 40 or 50% here, right here. So what he's just like what I was saying, you want to catch them when they're down here. So anytime you're going to go for those out of the money, catch them down here. Catch them at their bare minimums, okay? Because even though these people or these contracts in particular are negative 60, it's only because Alibaba was negative 0.5% on the day, okay? So technically speaking, like I said, these people could still be profiting, because by the end of the day, we still made our way up, right? So even though we opened the day and we fell, we still made our way up in the day. So these people, like I said, might have been down 90%, and it might have been a time where you could come in and buy this contract for just $5, right? And then you end the day up 100%, right? So it may not look like much, but you can see that people are trading it, okay? This is by no chance that this volume is here, whether these people are selling it or they came and bought this contract because they could buy 1,000 contracts for $5 and then make 100% by the end of the day and then sell the contract, right? So options, it's cool like that. You can come in and make scalps like that. So if you like trades like that, you can do that. It's totally feasible. I used to do that, but then I got too like, I wouldn't say I like clung to the profits, but I was like, dang, if I actually make it in the money, I can make even more money. And then you just forget to take your profits. And then next, you know, these things are worthless because we didn't make it here. So I learned that lesson. And then over time, I just feel more comfortable here. That's all that is. I take less risk here. That's it. I don't like risk. There is high reward here. Like you said, you can make 100%. Like if this was $5 and then at the end of the day at 10 cents, you just made 100%. right? Even if you could come in and buy these contracts, maybe something like this that's a little more feasible, right? Like 220 is not too far for Alibaba, but it's not going to happen by your expiration. Okay. But what you could do is you could come in and buy this contract. Maybe it was 20 cents or 19 cents or something. And then you come in and you buy this contract, and then it runs up to 37, right? So you can buy more contracts, just know that you cannot hold these, all right? Because every day that we don't get closer to this price, you lose money, period. So let's say you were holding these contracts, well, today you're down negative 60 because you held it. But these contracts are good to buy in the moment. So like when something falls to its limit and you're looking for a call, this would be the best time to go out of the money. But once it starts to move in your favor, go ahead and start taking some profits, because this sideways right here will cost you. You're not making any money for sure right here. You're not making any money. You're actually losing money right here out of the money for sure. In the money, your money just floating. You know, you're like doing these like $5 and $10 increments up and down, right? But if you got one of them out of money contracts, it's like, yeah, you were happy. And then you're like, oh my God, I'm freaking out. Did I sell? I'm about to break even. Because what happens is once this starts to settle here, your value will start to lose. And then it's like, okay, you're back to the starting point, because like we thought we were going there, but we're not. Sorry. Okay. Now you're worthless because we're losing time. Okay. So be careful about the out of the money. If you're going to do these, know that they're lottos. We call these lottos. Okay. If you're doing this, you're playing the lotto. So you can come in and buy this for 5 cents and it runs to 10 and you get out of there, unless you think that it can keep running up. But even in that case, I still think if Alibaba opened up, I still think these would still be in a bad position, because if Alibaba opens up, then the first thing it's going to do is drop. Right. So I would be very careful with these. It's not that I don't recommend them. There's great returns at them, but with great reward, there's a lot of risks. Now I can make just as much reward here, not as much as you are, but just as much. But I'm comfortable here. So when Alibaba dropped to 209, I'm all gas, no brakes on 210, because I already know that I'm about to go from here to there. And I'm willing to buy 3, 4, how many contracts I can afford. I'm buying them because I know that this can move. And I know that for the rest of the week, maybe I could have confidence to hold this. But these, you can't. You can't rest at night knowing that you're holding these. But for the right thing, they're good. Like if Alibaba could make these types of moves, you can do that. Like I said, when Tesla was at 550, I can go buy a 600 call, because I know by the end of the week, Tesla will be back at 600, right? So you can do it on things that move. But if you got something that's been consolidating for a little while, I would not recommend buying contracts like that. But definitely a good point though, because 5 to 10 don't sound like much, but that's 100%, y'all. That's 100%. So don't focus on the dollar amounts, focus on the percentages. That's what we're going for here. So another thing too, when you're making those gains and maybe, you're up, $60, but if that $60 is 300%, you need to go ahead and take that. That's a fact, because if you're waiting on 100%, it's not, if you're waiting on 100 out of that, it's probably not going to happen. Right? If you just made $60, don't be thinking you about to turn that into 15,000 all of a sudden. Like you just made 300%. What more are you asking for? Right? There's times that I may be up just, let's say $60, and it's 30%. Okay, I need to be happy with 30%. So I'm about to set this stop loss, because if $60 all this trade is going to get me, I'm happy with whatever that is. Sometimes I have to be happy with 10%. So especially if I buy a lot of contracts, sometimes that 10% might go ahead and jump up to $70 or $80. And if that's what I feel comfortable making, I take it. I take profits, y'all. I don't marry myself to anything. Honestly, that's why I love trading options contracts, because they expire. You cannot hold these. So I love trading these because they do lose value, and I'm not committed to holding them. So the fear of me losing money forces me to sell, which is awesome. But the confidence that you're going to have is in these better positions, right? I don't want to be buying in the middle. I don't want to be buying up here. I want to be buying at its lowest support levels. This is where I feel comfortable, and that's on the day chart, right? So always look at it in different, it's like layers, right? This is big picture. Okay, I'm ready to trade this today. Okay, where are we at on the day? Are we feeling good? Or we have a short-term trend confirmation, right? Now I'm ready to trade. I'm coming in 5-15 minutes ready to strike. And then I'm ready to buy this option on 1 minute, 2 minutes, 3 minutes, whatever interval I've got right here. I'm looking at the T because entry is so crucial with options. You can think it's a great price for the stock, and then it'll fall $1, and then you lose your delta. Right, where did I just click? So everybody understanding just the basis of options, the prices, the delta. Everybody at least understand the basics, because I want to make sure y'all are learning, you're getting this, you're going into the market, because a lot of people have been hitting me up and they're like, yo, I've been like using these strategies and it's been working. So that makes me happy. It makes me proud that like people are in tune, they're learning. Because I've had some students, y'all, where, you know, I'll sit down with them and still at a loss, right? So I want to make sure you all are all winning and all understanding. If you're not, now is the time to ask questions, and let's take a look at what you're trading, right? So anybody got any questions, want to look at anything? I'm gonna check out this chat as well, make sure I'm not missing anything. Cool. Well, if we don't have any questions, we'll go ahead and end this recording. Hold on 1 second. All right, recording.